Hello everyone. In last class, we discussed about the meaning of accounting and some of the basic terms of accounting. So in this class also, we have some more terms which were commonly used in the preparation of books of accounts. Let us start with the debt. So debt means nothing but debtors. So in last class, I explained about the meaning of debtors. Debtor means the person who owes money or things to the business. It's nothing but usually suppose we are doing a business, we have given some goods to the person, we sold some goods to Mr. X, so he can take some time to pay back the money to me. So till that time we call it as a debtor because he is due some money to us or else he is due something to us. So any person who owes money to the business, that means he is due to the business, either money or things. That is the person what we call it as debtor. So here debt refers to the amount or things due from the debtors. Amount or things due from the debtors. That is what we call it as debt. So debt, you can call it three types. So good debt. So good debt, the name indicates. Suppose we are doing a business, I am giving credit to some of the person. So is well known to me. I know he will clear his dues as soon as possible. So the person what we call it as good debt. That means certain debtors that we know that they will clear the payment after certain time. I mean the 10 days, 15 days or 1 month. That means we should clear about the things. They will clear the dues to the business. Those kind of things, those kind of debts what we call it as good debt. Those kind of debts what we call it as good debts. Then bad debt. Again the name indicates. So debtor, we know that he is unable to pay the money. We have given some goods to him. Due to some financial crisis, we come to know that he is not going to clear our money. So those kind of debts, what we call it as bad debts. Those kind of debts, what we call it as bad debts. Then doubtful debts. So doubtful debts. Suppose in a business, we have given credit to the customer. So we have given 1 month time. We have given 1 month time to him. So we are expecting the payment after the particular date, but he failed to pay the money. So he asked some more 15 days or 1 month time to clear his debts. So on that time we can call it as doubtful debts. On that time we can call it as doubtful debts. The simple meaning, debt means money or things owned by any other person. That is what we call it as debt. We know that he is going to clear the money. We can call it as good debt. We know that he is not going to clear our money or things, called as bad debt. Certain question marks will happen whether he is not going to clear or not clear. We call it as doubtful debts. So debt, we can call it as 3 types. So and we call it as assets. When we come to next term, assets. So asset is a big term. So assets means anything which will give some economical benefit to the firm for a long period of time. Those kind of things what we call it as assets. Those kind of things what we call it as assets. For example, if you take for example land, building, machinery. So all these things we acquired by giving of money something else. So immediately you won't get the returns. So it will support us. So it will be called as biggest backbone of the company because the value of land will become more. The value of building will makes you to do your work. The machinery will gives you output. So that means anything which will give the benefit, which will give economical benefit for the firm during a long run. At the time of liquidation also, or at the time of closing of the company also, if you sell, you'll get some money. So those kind of things, what we call it as assets. Anything. So anything which will realize in the form of money at the end of the day. That is what we call it as assets. That is what we call it as assets. Example, you can take land, building, machinery. All these are examples. Even debtors also is called as assets. Because after 1 month, it is going to realize in the form of cash. So you get to receive the benefit. So any commercial benefits that you are going to receive from the things, what we call it as assets. Either it may be short-term assets or long-term assets. That is what we call it as assets. Then tangible assets, and assets can be classified into 5 types. So in that, first one is tangible and intangible assets. So tangible assets. So here tangible here refers to the things which can be touched and visible to us. The things which can be touched and visible to us. So that is what we call it as tangible assets. That means the assets which have some physical existence that we can able to see and we can able to touch. Those kind of assets, what we call it as tangible assets. Example, you can take land and building. So we can see the land, we can touch the land, so we can call it as tangible assets. Then intangible assets. So intangible assets here refers to the things which do not have any physical existence. That means which we are not able to see and touch the things. That is what we call it as intangible assets. So example, you can take goodwill, copyrights, software. You can observe, we can call it, but we cannot see the company's goodwill. Only it's visible in the form of numbers. We cannot able to see and we cannot able to touch. And copyrights and software also. So these are the things which we are not able to see and touch. Those kind of things which do not have any physical existence, we call it as intangible assets. We call it as intangible. That is what we call it as tangible and intangible assets. So can you look at the second one? Fixed and current assets. So fixed assets here refers to the assets which will have fixed in nature. There will be no volatility during a particular year. So this is what called as fixed assets. Example, you can take machinery, investments, land and building. So all these are fixed in nature. That means it cannot change its place. It cannot be moved from one place to another place. Those kind of things what we call it as fixed assets. Current assets. So current assets which have very short period of time and which can realize within a year. Is called as current assets. Example, debtors, stock. You can take examples of current assets. That is what we call it as fixed and current assets. So fixed assets here refers to the assets which will realize or which will going to realize it will more than a year. That means the asset is going to continue over a financial year. That means the asset's lifespan will be in a long term in nature. Those kind of things are what we call it as fixed assets. The assets realized within a year. The assets will be very liquidity in nature. The assets is going to convert easily into the cash. Those kind of assets what we call it as current assets or liquid assets. Example, cash at bank, bills receivable, debtors, stock. So all these examples of current assets. Then monetary and non-monetary assets. So monetary here refers to the assets. Monetary assets here refers to the assets which will have the same value at the time of selling. Those kind of things what we call it as monetary assets. Those kind of things what we call it as monetary assets. For example, debtors you can see. So book value is 10,000 rupees. So they are going to clear after 1 month. So after 1 month also you could realize in the rupees 10,000 only. Same value. What you have recorded the book value, when it realize at that time you can receive the same value. Those kind of assets what we call it as monetary assets. Those kind of assets what we call it as monetary assets. Again you can take example of cash at bank. Take example of cash at bank. Suppose you have in your account at 1 lakh. So when you withdraw, obviously you withdraw 1 lakh. It is what we call it as monetary assets. So monetary assets are the assets what are the value at the book value. Somehow what is the value when the assets is sold or realized. If the value will become same from the book value at the time of realize, Those kind of assets what we call it as monetary assets. Those kind of assets what we call it as monetary assets. Then you can come to non-monetary assets. So it's quite opposite for that. So non-monetary assets are the assets which will record at the book value at the invoice price. At the same time, when you realize the asset, so it may not be changed, it may amount might be different. Those kind of assets what we call it as non-monetary assets. Those kind of assets. Yes, we can see non-monetary assets. So monetary assets, what are the value at the record at the book value? When it realize, we can get the same value. That is what we call it as monetary assets. So non-monetary assets are the assets which will have difference. If you record the book value is one price, when you sold, realize at some other price. That is what we call it as non-monetary assets. Example, building. So you constructed on 10 years back, it worth rupees 1 lakh. So after 10 years, the value will become down or up. So it won't realize for the same value. It may be coming down or going up. Depends upon the market factor. That is what we call it as non-monetary asset. Even you can take the land. Today you purchase the land for rupees 10 lakhs. So after 10 years, the land value will become more. It might be double. Or else the land value will become down. It may be down than what you purchase. That is what we call it as non-monetary assets. Then you can see next one, fictitious assets. So here fictitious assets refers to these are not the real assets. But you can get the benefit in a future period of time. That is what we call it as fictitious assets. You can take example of advertisement expenses. Suppose I'm doing a business. I can spend 20 lakhs on promotion of my business. So that is what we call it as advertisement expenses. So that 20 lakhs, can it realize it by next year? Can I get 20 lakhs back in next coming year? No one will give guarantee. But I spend it for what? Because of that advertisement, my business may get grow, my sales going to be increased. So for getting of any future economical benefits, today I am spending. Those kind of expenses cannot considered as a loss, but treated as fictitious assets. It might be expense. We can call it as fictitious assets because there is no realizable value, but we'll get some economical benefits in the future period of time. Those kind of expenditure, what we call it as fictitious assets. Next example, spending on advertisement. Again, you can see, for example, discount I am giving. Did I get any benefit of giving discounts? It's a kind of loss to me. 100 rupees is MRP, I am giving for 90 rupees, 10 rupees is a loss. So because of the 10 rupees, I realize 90 rupees. So it is called as benefit, future economical benefits. So those kind of things what we call it as fictitious assets. Example, discount given, spending on advertisement expenses, and preliminary expenses. You can come across many times this term, preliminary expenses. So all these expenses what we call it as fictitious assets. Then we can see last term, vesting assets. So here you can take example of the assets while using it's get wasted, or else the assets by wear and tear of using, the assets value will become down. So this kind of assets what we call it as vesting assets. Example, mines you can take. So what happens If you're getting back things for 10 years, today we start mining. So after 10 years, what will the value of mining? The value of mining will come down. That means the value of mining will become low. Today we will extract something. We'll keep on extracting the things from the mining. What happens? The value of mining will become low after 10 years. So those kind of things are what we call it as wasting assets. It is what we call it as wasting assets. There are different types of assets. Thank you.